Bloomberg Audio Studios. Podcasts, radio, news.
This is Bloomberg Businessweek. Insight from the reporters and editors that bring you America's most trusted business magazine. Plus, global business, finance, and tech news. The Bloomberg Businessweek podcast with Carol Massar and Tim Stenovec on Bloomberg Radio.
Well, of the more than 90 lawsuits filed against the Trump administration in the first month, more than 20 directly involved DOGE, of course, the Department of Government Efficiency. These cases challenge Elon Musk's position, DOGE's structure, and who is getting access to internal agency systems, some of which include the personal information sensitive payments data of U.S. citizens. You might recall just last week, a group of 19 mostly Democratic-controlled states suing the Trump administration over DOGE's access to sensitive data won a motion, I should say, for a preliminary injunction to extend an existing restraining order on the team. So let's talk about this and all the activity that's going on. Among those involved in those suits is our next guest. We welcome in studio Connecticut State Attorney General William Tong. General Tong, great to have you here in studio. There's a lot going on in terms of lawsuits by Democratic-controlled states. Given all of them that are challenging activities of Musk's DOGE team, what do you think is the most important for Americans and why?
So thanks, Carol and Tim, for having me here. What's most important is that Democratic state attorneys general are taking action to protect our states. You know, no matter who the president is, it's my job to protect Connecticut families. And right now, they're exposed. You know,
are you talking about money that essentially should come to the states, or what in particular?
Money, our social security numbers, banking information, important private information that's not just in the U.S. Treasury, that may be at the Department of Education, that may be at the IRS. Right. An unelected billionaire and his army of hackers and wannabe stormtroopers are now tearing up the federal government. Nobody elected them. There's no authority or statutory basis to give them this power to go in and tear up the federal government. It's as if I said to you, Carol, you know what? It's as if Donald Trump came down here and said, Carol, you're great. I'm going to put you in the most secure nuclear weapons facility in the U.S. Armed Forces. I'm going to give you the password. Just log in and have at it. Would anybody have a problem with that?
Is it what's being done, who's doing it, or that there is no transparency to it that bothers you the most?
It's all of that, and it's the damage right now. You know, when he gained access to Treasury's central payment system, the Bureau of Fiscal Services, he had control, one guy, and again, his army of hackers, to cut off Social Security payments, veterans benefits, right? They're already canceling contracts at the Department of Education. It's real world impact right now. Money is not flowing to states. The Medicaid portal was closed. The Head Start portal was closed. Important grants and federal funding for transportation products, electric vehicles, climate-related investments, all of those, depending on the day and depending on the hour, they're open or they're closed.
General, Elon Musk did speak during a cabinet meeting or ahead of a cabinet meeting. We took those comments live. He said that DOGE is helping fix government computer systems. Overall DOGE goal is to address the deficit. What would you say to the folks out there listening or watching right now who said this is what Americans voted for? They voted for more efficiency. They voted for government spending to be reduced, and as the president says, a reduction in, and again, his words, waste, fraud, and abuse.
Yeah, they didn't vote for mass unemployment. They didn't vote for mass layoffs. They didn't vote for an unelected billionaire to wreck families in Connecticut and across this country. And if it, you know, it's not just a federal employee in Alexandria, Virginia. And by the way, that's important too. If mom or dad gets fired tomorrow, many families, even families that do well and listen to this show, you know, they live 30 days out or check to check. And that family may have relatives in Connecticut. There are federal workers in Connecticut. There are nonprofits in Connecticut that are laying people off right now because they rely on, anticipate federal funding that is not flowing, and they have to make decisions amidst all of this uncertainty. And so families, children are being hurt right now. And it's my job as Connecticut's Attorney General to protect them.
Do you have specific examples of how many workers have been affected in Connecticut, how families have been hurt in Connecticut? What can you point to as sort of real world effects?
So, for example, there are highway programs right now that aren't proceeding, that aren't going forward because funding from the Department of Transportation is not flowing. Remember, government isn't just a big employer. It's one of the biggest employers. It's also one of the biggest investors, spenders, and customers. And if the federal government is not there to buy, invest, to be a customer, then projects don't happen. And that impacts not just state government, not just the federal government, but all of the businesses, small businesses run by people in Connecticut, small business people who rely on that part of the economy.
Some would argue, though, just because it's the biggest doesn't mean it's the best or being run the most efficiently. So what do you say to that?
Yeah, so everybody, not just at the federal level, but at the state level, should be working on making government more efficient. And I don't disagree with that. I don't think anybody does. But number one, you got to do it in compliance with the law. You have to do it in a way that's safe, that maintains the safety, for example, of our personal information. Just because you want to make Treasury more efficient doesn't mean you can affect the largest data breach in American history and expose all of our Social Security numbers. And God knows what happens to that. Does that end up on the dark web? And then we all become victims of scams. And by the way, that all comes back to me as the state attorney general when my phone starts ringing off the hook.
So I guess the question is, if the government is indeed the federal government, if there are inefficiencies there, their spending does need to be cut. What would you propose is the right way to do it?
That Congress exercise its power to do that. The Constitution is very clear. Under the spending clause of the U.S. Constitution, it's Congress's prerogative to decide how the nation's resources get spent. Okay, and so Congress needs to do its job. And
is Congress not doing its job right now, or do you feel like it's certainly not along party lines?
Congress, in many respects, feels broken, but one good example of how broken it is that Congress, it seems in this budget proposal, proposes to cut Medicare for the states. Are you kidding? You're going to go after Medicare, health care, children? I said when the federal funding freeze was announced that this is a war on the American people, and maybe that felt a little dramatic at the time. But what's clear now, 4 weeks in, is that it's a war on America's children. Right? Medicaid, healthcare, Head Start, education funding. The Department of Education is saying they're going to cut education funding, not just for colleges and universities, but for all levels of education if you can't meet their standards on what's acceptable and not acceptable in terms of your curriculum and your programs. This attacks kids, children, families. What is the point of that?
You've been in this position since 2019. That was a few years into the first Trump administration. You were active in big legal suits against the Trump administration during that time as well. We've talked a little bit about over the last few months how this administration feels a little different because of the people they've brought in. How would you say the legal aspect of this has been different? Do you think the Trump administration was much more prepared this time around?
No, it's more lawless and more unconstitutional. And yes, it feels like they were more prepared to do the wrong thing. They were more prepared to break the law. They were more ready to break the law. You look at
what are some examples of them breaking the law?
And Dan Bongiorno. Oh, well, first of all, the very first thing they did and we sued on, which is to abrogate birthright citizenship and to eliminate birthright citizenship. That is utterly unlawful and unconstitutional. Look at the 14th Amendment and what the words of the 14th Amendment say. They're very clear. If you're born on American soil, you're an American citizen, period. If not for the 14th Amendment, Tim, I'm not sitting here. I'm an American citizen by right of my birth. And it's as if, Carol, as if a Democratic president, let's say, some future president said, okay, you know what? No Americans should carry firearms. It's that unconstitutional. People would lose their minds if some politician said that. And Donald Trump is doing that with birthright citizenship.
General Tong, what do you think will happen to Trump's birthright citizenship executive order and his plan to also ban transgender people from the military?
I think his effort will fail, and I think the Supreme Court will do the right thing, and that it will read the 14th Amendment to say and mean what it says, which is that if you're born in America, you're an American.
Is that the ultimate test of the president's policies? Do we continue to see legal challenges to the extent that pretty much everything just goes to the Supreme Court?
Look, every middle schooler in America knows that we have a system of checks and balances. Without checks and balances, there's no America, right? If the president has unchecked power, then Congress becomes optional. Our rights become optional. States become optional. And so checks and balances, these lawsuits are about checks and balances. Congress right now isn't a very effective check. And so state attorneys general, we are a check through the courts, through the judiciary, through the federal courts on a president who doesn't respect and follow the law.
You know, it's interesting. There definitely have been some protests at, community meetings with members of Congress. But going back to that, as you say, Congress is there to enact the law, right? And help make decisions. But people in general, the president is still popular. People agree with what he's doing. So I go back to kind of Tim's question. If you look at Americans put this president in office.
He won the popular vote this time.
He won the popular vote. He won it all.
Yeah.
And so there are a lot of Americans who think this is the right direction for the country.
I guess I don't want to quibble with, whether he's popular or not. I think he's underwater, according to most polls, meaning less than 50%. I think it's pretty clear that this country is split pretty evenly, 50-50. It was a very close presidential election. I don't think most Americans who voted for Donald Trump, I don't think most Americans expect him to break the law and to take the Constitution and set fire to it. I don't think anybody, and this is why I think Elon Musk and again his army of hackers are very unpopular, because nobody said turn the keys over to somebody that we didn't vote for, give him the password, give him the codes, and have at it. Do whatever you want and hurt states and people directly right now. The damage is being done right now. If the state of Connecticut is working on its state budget for the next 2 years, right now, we'll finish that work in early June. If they blow a huge hole in federal funding, we're in big trouble. And many states are in the same position. And I would say something, by the way.
Really quickly.
Red states are much bigger takers of federal funding.
No, it's a really good point. We got to leave it there. General Tong, thank you so much. This is Bloomberg Businessweek.
You're listening to the Bloomberg Business Week podcast. Catch us live weekday afternoons from 2 to 5 p.m. Eastern. Listen on Apple CarPlay and Android Auto with the Bloomberg Business app. Or watch us live on YouTube.
Investors in U.S. government bonds starting to bet that the Fed will soon need to pivot from worrying about sticky inflation to fretting about slowing U.S. economic growth. That sentiment helped drive Treasury yields to their lowest levels of the year. We saw the 10-year dipping to 4.27%. I was going to pull it up just to see where we are right now. We're at 425, so we're even below that. So we continue to see yields dipping lower. Strategists over at Morgan Stanley say the 10-year has scope to fall back below 4%, a key level, if the prevailing view on the Fed shifts somewhat. So we wanted to talk a little bit more, Tim, right, about fixed income.
Yeah, so for more on fixed income, we head out to San Francisco, and that's where we find Karen Veraa-Perry, head of iShares fixed income strategy over at BlackRock. Karen, good to have you on with us, especially on a day when really everyone's obsessed about the U.S. equity market, about the results of NVIDIA coming at, 4:20 Wall Street time. What do you focus on a day such as this?
We like to look across the markets and see what's happening in fixed income. So as you pointed out, we're seeing the 10-year at the lows for the entire year. If you recall, back in September, 10-year yields were at 365, and they rose pretty quickly with the assumption that we're going to get a little bit higher inflation levels and more growth. And then this week, that thesis has moved back down. So concerns about growth, inflation's been really sticky here. So we're just watching what's going on across the yield curve, as well as in the corporate bond market. We've really seen IG spreads holding tight around 82 basis points, but we have seen high yield this week come off a little bit in the 270 range.
So does something like an NVIDIA, in terms of what we get, I mean, there's obviously been so much on the equity side of the AI euphoria that we've talked about over the last 2 years, although NVIDIA kind of unchanged, a little bit lower on the year here in 2025. But is there anything that you look for in clues in terms of what the company might say that might impact your world?
I think the biggest thing is the market really wants the earnings to be very strong, and And I think the main point that people should think when they're investing in sectors like this is they want to remain diversified. You don't want to just have all your eggs in one basket. If tech, IT, some of the other themes don't hold up. And I think this is where we are seeing really strong flows coming back into fixed income, specifically in fixed income ETFs. We've had $70 billion of inflows this year, which is the strongest start we've had for many years. And I think investors are looking to diversify portfolios away from some of the equity markets and make sure that they have some hedges built in there.
Okay, well, speaking of hedges, I'm curious about what you see as sort of the mix for an investor diversified in one of your funds right now. When you think about corporates, when you think about government paper, when you think about what's happening with corporates, like what's the mix for you?
I think we're recommending people remain a little bit underweight duration. So if you think about it, over the last few decades, we've seen slowly the overall duration in the market increasing just with more and more long bond issuance. So we're seeing that sweet spot still see the belly of the curve, that 3 to 7 year point on the curve. So as people are building in portfolios, they're also building in more income. So we've seen about 16 of the top 25 flows into ETFs this year are coming into sectors that aren't in the Bloomberg Barclays aggregate. So they're coming into sectors like floating rate, like cash, so people are keeping things really short. Tips have been popular this year, and even funds that have more incumbents to them. So as you're constructing portfolios, thinking about having some of those asset classes that are going to hold up a little bit better if we do see a lot of interest rate volatility on the long end.
Sounds kind of conservative to me. What's your read on it? This is your world. Would you say those flows into those types of funds, whether it's tips, concerns about inflation, or whether it's more cash, short-term duration, that it's investors saying, had a good, strong 2 years, certainly just on the equity side of things, if you look at that as a benchmark, that maybe I just need to play it safe for a while and let the dust settle?
Yeah, Carol, that's really interesting. We've seen about $1 trillion coming into money market funds over the past 12 months. So we see about almost $7 trillion in money market funds. So I think people are having a portion of it, keeping that really conservative and really safe. We actually just launched 2 different money market fund ETFs that enable investors to access those money market 2A7 style funds, but in an ETF wrapper. And I think we are going to see people who are really sitting in the front end of the curve and being really conservative with those allocations.
Okay, so you launched two new funds because the demand was there, correct?
Absolutely. We've seen a lot of people who are unhappy with some of their sweep options, and they just want more choice when it comes to their money market funds.
Hey, so Karen, where's money going out of in the fixed income world, or at least within your iShares universe?
We're still seeing kind of a barbell take place where we're seeing some front end and some long end. People are moving to that belly of the curve, albeit very slowly. Emerging markets is actually an area that we've seen outflows this year. I think just with some of the concerns with what's happening with tariffs and overseas and growth rates, we've really seen people stick close to home with a lot of flows into treasuries as well.
Do you think that changes if these tariffs are put into effect or not put into effect? Like, what moves will we see depending on Trump policy from Washington?
I think we'll see people stay really conservative. I think people aren't going to be hesitant to taking a lot of risks, whether it's with credit or with adding too much duration. So they're going to keep it on the very short duration side of it. But I do think having at least some fixed income in your portfolio to offer that ballast. Look what's just happened this week. We've had multiple days when the equity markets are down, and because bond yields have also the prices come up, and that provides kind of a more balanced experience.
In the introduction to you, and right, I am looking at a 10-year right now at 4.24. We have Morgan Stanley saying the 10-year has scope to fall below 4% if the prevailing view on the Fed shifts somewhat. Do you think that's likely?
I think it could come to pass. So let's just see how some of the data looks. What I'm looking forward to is the summary of economic projections. So that's out at the next Fed meeting on March 19th. So we'll see how they scope out their views on inflation as well as the employment situation. Right now, the Fed funds futures market is pricing in that overnight rate getting down to 375 by the end of the year. And I think how quickly they do that is the question. And at this point, it looks like they're going to be on pause till later in the year.
Karen, is it safe to say, or I am curious what your view is in terms of it? Last Fed meeting, it was more still concerned about inflation, but are you starting to become more concerned about U.S. growth slowing down versus inflation being sticky?
I think that's really the wild card. We're trying to look out for how much some of the changes in the policies are going to come through and start to impact growth. I think it's been really difficult to tell. So everyone will be watching the data like a hawk. We'll especially be looking at some of the jobs numbers later this week and next week, and more inflation data to kind of get a better and fuller picture on that.
Do you see the government cuts, the Department of Government Efficiency, the layoffs? Just 30 seconds left. Do you see that having a major effect on the economic data?
It might take a few months to really show up in the jobs numbers. So I think there's a lot of uncertainty around that, but I definitely think that the Fed will be on pause longer if we do start to see some of those numbers come through, and then they're going to be really worried about inflation as well. So we kind of have two sides of the coin that are going to be pulling on each other.
All right, going to leave it there. Hey, listen, Karen, great to get some time with you. It is an NVIDIA Wednesday, but really fixed income always on our mind, no doubt about it. Karen Veraa-Perry, she's head of iShares fixed income strategy over at BlackRock.
You're listening to the Bloomberg Businessweek podcast. Catch us live weekday afternoons from 2 to 5 Eastern. Listen on Apple CarPlay and Android Auto with the Bloomberg Business app, or watch us live on YouTube.
Did you see this story, Carol? Most read in the most read 8 hours, most read in the last 1 hour. Junior banker hiring is a battle against AI written resumes. Listen to this. It's about the junior bankers who are using AI to help draft their resumes. The message: recruitment firms, they are on to you. Using AI becomes an issue for recruiters when the applicants don't properly proofread their applications. I mean, come on, guys. You got to proofread.
And apparently they're using certain phrases and words such as robust and meticulous.
Yeah,
is that right?
That's what AI uses. I'm curious what Sophie Novati has to say about this. She's the founder and CEO of Formation. It's a company that helps mid-level software engineers get jobs at tech companies. Sophie joins us from San Francisco. Sophie, welcome. We're going to talk about AI and tech roles in just a second, but you've got such a great view of the hiring that's happening at these tech firms. You were an engineer at Meta and Nextdoor as well earlier in your career before launching this company. What does the landscape look like to you as you look out across Silicon Valley right now? How are these companies doing?
Yeah, thanks, Tim, for having me on. And I'm the CEO founder of Formation, and we are helping software engineers land prestigious roles in some of the world's top tech companies. And we are definitely seeing a lot of shifts in the market right now. AI is really redefining a lot of the job responsibilities and skill requirements that are needed of software engineers today. And really what's happening is that as engineers are kind of adopting new workflows where AI is kind of automating a lot of the repetitive work as part of software engineering, humans are now being, freed up to focus on some of the more higher level work. And so, things like running boilerplate code or generating test cases, or even writing documentation, fixing, simple bugs like that are examples of tasks that are being, reduced or even automated in some cases by AI. But as AI is taking over some of that repetitive work, engineers are being asked to focus more on the higher level creative skills, like problem solving, architectural design, and handling more complex design decisions, as well as, navigating ambiguous real world requirements. Well,
Sophie, a few years ago, everybody was told to go learn how to code, and that was sort of the way to get this into this prestigious career and get like a solid career, especially as a pivot goes. Is that still good advice for folks who are out there, or has AI taken those kind of roles that you'd learn, these sort of entry level?
Yeah. So it's definitely a tricky question. Right now, the entry level role in terms of software engineering is changing very rapidly. AI in some ways is making engineering more accessible by making, I think one of my favorite quotes about AI is that the hottest new programming language is now English, right? Which is great.
It's good for people like me who have no idea how to code. But can I prompt ChatGPT? That's the question.
Congratulations, you're an engineer.
Yeah, I like it. Okay. Go ahead.
But I would say that right now, that's kind of the ideal. And realistically, what's happening is that, really senior engineers are very much required, and even more so than ever, to be defining and designing system architecture and figuring out how to interpret, product and business needs into technical specification, and really ensure that the AI generated code meets quality, security, and performance expectations. And your ability to evaluate that code requires the knowledge to be able to code. And so I believe that the ability to code as a foundational layer is going to remain the case for a very long time to come. And without it, it's going to be very hard to be performing at the level that is expected of you
So,
as
Sophie,
an engineer in today's market.
You mentioned, I think, the entry role in engineering being impacted maybe the most by AI. Does that mean it's ultimately going to be replaced by AI, do you think? And maybe the higher levels of engineering will be safer?
Yeah, well, so AI really is reshaping but not replacing the software engineering role overall. And a lot of the repetitive work that is being replaced is a portion of every single software engineer's job, but it is a bigger percentage of more junior engineers' job, which is, one of kind of the driving forces behind the huge shift that we're seeing towards more senior engineers. I think that at the same time, AI is making it easier for engineers to onboard and learn about large code bases and get ramped up. I will tell you, I will always remember my first day at Meta, where I first opened up a million file code base and having no idea where to start. Right, as a fresh college grad who had only worked in tiny code bases before, the ramp up time was significant in the months before an engineer is able to be productive. And I think that time is going to get significantly accelerated with the use of AI tools. But the way that you are interacting with the code bases, I think, are going to change. And so we're going to have to incorporate the usage of AI tools as part of, CS curriculum, as well as obviously formation is thinking about how we can introduce engineers into using these tools as a native tool as part of their learning journeys.
And reminder to everybody, you were working at Meta Platforms back when it was a company called Facebook.
Facebook, that's
it
right.
was not
I
Meta
am
Platforms.
still struggling with calling it Meta, but I'm
you're not the only one. Hey,
Yeah.
I think for some context for our viewers, our listeners, give us an idea of salaries that are typical for the jobs that you place people in.
Yeah. So I am incredibly proud of the results that we've been able to achieve at Formation. Right now, and in 2024, our average, we were able to help people increase their compensation by over $100,000 on average. In terms of what this looks like, typically on the market, there is I would say, huge pay disparity, I would say, between kind of what you would call the top tier tech companies and kind of the average tech company, maybe some of the smaller tech companies, as well as companies in the lower paying industries, I would say. And this is one of the kind of results we've been really driving at Formation, that in the last year, 76% of our placements have been happening at, the top tier companies. Like, I think our top companies are, Meta, Amazon, Microsoft, Google, companies like that. And at a company like that, a senior software engineer, they might be looking at compensation in the range of $250,000 to upwards of $500,000. And, what that looks like is a base salary that's maybe starting at around, let's say 170 to 200K. There's typically or often a 10 to 15% target bonus that goes along with that. And additionally, senior engineers are getting very substantial stock compensation packages that can sometimes even exceed the base salaries that you're getting for, a total compensation of over $400,000. And that is in stark contrast to what you see at these other tech firms where, you might start with a base salary in the 120 to 150 range. There might be very modest performance bonuses, and oftentimes there are minimal, if any, stock compensation. So, landing a role at one of these companies might result in half the compensation you'd expect at, a FANG level.
You were talking about the FANG companies, the Mag 7. What about the high-flying startups like an OpenAI or an Anthropic?
Yes, absolutely. I am including these companies. It's really hard I've just settled on the term top tier to be kind of an umbrella term to include
But you'd
all
include
of these
OpenAI in there, for example?
Yes, I would.
And the reason I ask is we just heard about the talent war that's happening in Silicon Valley and the way that these companies are paying
absolutely. Up. I think that every time like a major AI researcher moves from one company or other, there's a headline news, right? It's that big.
Is there a talent? We just got about 30 seconds left, Sophie. Is there a talent war for top engineers in Silicon Valley right now?
Yes, absolutely. I would say that this is existing both within very senior software engineering roles for product positions, as well as in particular AI focused roles within engineering. So this is both increased demand in kind of traditional roles such as machine learning, data scientist, things like that, as well as some of the emerging roles that are happening as a result of AI, like prompt engineering, fine tuning specialists.
All right. So parents, if you're listening,
sign those kids up.
Go to,
Hey, that's what I'm thinking.
Engineering, tech, right? Computer engineering. Sophie Novati, founder and CEO of Formation.
I'm driving in my car.
How about you let me drive?
Oh, no. This is not a toy.
Who's gonna drive you home?
Honey, please, I'll do the driving.
Drive on.
Excuse me, I want to drive.
It's the question that drives us.
This is the Drive to the Close.
That funky music will drive us till the dawn.
On Bloomberg Radio.
All right, everybody, just about 18 minutes away from the closing bell on this Wednesday. A slew of earnings coming your way, including NVIDIA, about 4:20 p.m. Wall Street time. Yeah.
Wait, seriously? NVIDIA's happening today?
You're so funny. We've seen stocks bouncing around their lows of the session. You heard from Charlie and Bill, but we will see whether or not NVIDIA kind of changes the feel and the tone in the trade.
Is it time to buy?
I don't know.
Is it time to sell?
Got a great guest who can answer that.
That's the question we always pose to Vance Howard. Let's drive to the close with Vance Howard. He's CEO and portfolio manager at Howard Capital Management. He's here in the Bloomberg Interactive Brokers studio. You've got this indicator. Is there any AI, or is this just a screen?
Tim, we're working hard to make it better and better and better, and the tools that are out there now are making it more efficient and a little bit more effective. So that's kind of interesting and fun. We'll live our whole lives and you're never going to get it perfect.
Right.
But if you keep striving and working hard, you can create something that's very effective, and I think that we have.
It's called the HCM byline. What's it telling you right now?
It's telling us to stay long this market.
It is.
It is. We're long this market. It's saying any pullback's viable, right now. So we're very positive. I'm real positive on 2025. The market got tired about November. We had a little run up with the election and all this kind of stuff, but it's been tired for about 4 months. And markets get tired. That doesn't mean anything's wrong. It doesn't mean you're headed for a bear market. It just means it's like we call it in Texas a little Spanish pause. So
I love that. Hey, listen, let me ask you though, in terms of your indicator, when there's stuff that is kind of coming at us every day, not a judgment call, but we do have a president who likes to make comments, and we're seeing events from the Oval Office every day. Does it kind of muck up the indicator at all? Like, how do you take out when there's that much static almost on a daily basis that could impact industries, companies, and so on?
Carol, I think that's the beauty of the HCM byline. That's what it was designed to do, is to take all that noise out and just trade what actually is happening.
Even when there's stuff coming every day.
It even makes it more powerful, because,
right.
we've had chop for 4 months straight, and it's just been chop. But the byline's strong, it's staying strong, and also when you look at like the cash buildup of $7 trillion on the sidelines, that's an amazing amount of firepower for this thing.
Not all of it may come back though.
Not all of it may be put to work. It only takes $1 trillion or $2 to move this market. So so we're going to stay positive on that. But with the HCM byline, what I do like about it is it holds your feet to the fire.
Yeah.
And all of a sudden you get news here, you get news there, and just file it and put it in the file cabinet and let the byline do its thing. As long as the trend's up, you want to stay long the market, and you want to buy on every dip and look at good quality stock, good quality ETFs, and trade long.
Is it ever wrong?
Absolutely, it's wrong.
Okay, sorry.
It's wrong about...
How much?
It's wrong almost 32% of the time.
Okay. So almost 1/3.
Yeah, and
okay.
But one good thing about it is it never stays wrong. It'll adjust reasonably quick, but it is not a perfect... No, they don't make a perfect indicator, so...
I'm just looking at the latest of the S&P 500 right now. We actually are in the green, up 0.1%. So we're off those losses earlier in the session. Is this a dip worth buying?
Yes, it is. And, it's a funny thing is when you look at NVIDIA, and it's all the rage today.
Right.
And in all probability, it's going to be like a boop. Tomorrow's going to be like, okay, that really had no real, everybody, I don't think it's going to move the market one way or the other, because I think NVIDIA is sort of worn out and tired right now. Not that it's not a great company, not that it's not a great buy, but everybody's played the news off of it for 2 years now. We need a new story. And,
you do like the QQQ though, right?
I love the Qs.
And NVIDIA is the second biggest holding in the QQQ.
It is.
So that's a lot of those go names.
It is. And I've owned NVIDIA in our funds for 3 years straight now, and I'm not selling it right now. But yeah, QQQ, if it'll break out of about 540, then you've got a new breakout on your hands. And I think that's incredibly positive, incredibly robust, and people should buy that breakout.
It's at 515 right now.
Yeah,
so
540 right now.
Yeah.
If it breaks out of that 540, because it's touched it a couple of times,
right.
Carol, it just hasn't been able to really thrust its way through. So you've had the momentum stocks really backing off. But you went from.
I'm just saying it's at 515 now. So you're saying
it needs to break above 540.
Right.
And so it came close like 2 or 3 weeks ago, and it was touching up to 539. It tapped it, and then it's been selling off a little bit since. But
so it's got to move up a little bit.
Yeah. Does the HCM byline, does it look at individual equities, or does it look at just the sentiment and indexes? Like, can you plug an equity into it and it'll tell you whether to buy it or not?
It's challenging on an individual equity or an individual ETF, and we have different systems that monitor and do that to help us pick out what's the most productive asset class or stock to own at any given time. But what you really want to know is if the sales are are the wind in your sails, and if it's not, you're fighting the upward, fighting a nasty tide. You don't want to do that.
With some data like we got yesterday, when consumer sentiment comes in soft, for example, from the conference board, does that change the read?
It doesn't change that quick because the HCM byline, has been positive for 2 straight years. In 2022, it went negative a couple of times. We pulled a lot of money to cash, and it's been positive for quite some time. It's not a short-term indicator, which is a good thing.
But there is still that it gets you to do something, right? Like sometimes it'll tell you to pull cash, you do it, and then it'll have to tell you when to put that cash back in. So what's sort of the not the breaking point, but what's like the indicator that tells you to do that?
To come back in?
Yeah.
Well, the byline is the indicator. I mean, if it goes negative, we're going to pull the cash, and if it goes positive, we know we're going to move back in. But when we move back in, our job is to also select the most productive asset class. Is it tech? Is it financials? Is it energy? We've got to do that because that's how you build up alpha inside your fund, is trying to catch those nice pops when you're getting some good movement.
So how do you all right, so we mentioned the QQQ that you like. Amazon is another name that you like.
I like it on this pullback.
Okay.
And I think it's come back. I think it's a very viable pullback.
It's just down about 2% for the year, but you think this is one that you'd be. And is it just because it's pulled back, or?
I think it's a wonderful company.
Yeah.
It's one of the Magnificent Seven. And the Magnificent Seven went from being overbought, now it's oversold. So I think if you look at some of those 7 stocks, there's some nice opportunities there. Carol, my top pick of the year is Salesforce. CRM was my top pick this year. I like it a lot.
Why?
Well, number one, I love recurring revenue. They're subscription based, so that means every month they're not having to resell their product. They've got a subscription base, so every month they're getting a check.
Right.
Number 2, AI is going to benefit them quite a bit. They're well managed. They got great revenue.
The expectation is going to be an overlay, right, of all the AI. But forgive me, go ahead.
No, but I think like what you just said, I think AI is going to make a big impact with Salesforce, and I think that people will actually be able to use it and feel it a little bit more than they can in other areas.
Stock's down about 16% from hitting a high back in early December. So you've been putting new money to it.
We have been, yeah.
Is there a presidential trade that you find interesting right now?
Well, you go back and you look at what happened with Trump in the first term, and it was the same stuff. It was the first 90, 120, 4 or 5 months. It was just sloppy, and everybody's trying to figure him out. And then everybody got used to it. And all of a sudden, the news that comes out wasn't that dramatic.
Do you really feel like it's sloppy this time around? I think many would argue that it's a lot more organized.
It is.
And they came in with a plan.
It is, but I'm talking about the market. I'm talking about the market. If you remember 3 or 4 months when he took over, it was pretty sloppy and messy, and this same thing here. But you got to get used to the guy. He's interesting, to say the least. So,
yeah.
Are you done with your portfolio management?
No, I'm not. I never am. No, we can't do any sort of thing. We can just buy indexes and hold them forever.
But someone like you, would you like to pick your brain?
That's all we do here.
Like I know we have to sit and kind of.
Sit on our hands. But I think psychologically it's better for me. Psychologically it's better for me because can you imagine me like trying to pick time stocks?
I've had to wait to sell something, and it's just rough. It's just rough, and we do have to be careful. I get
to ask the questions, so there's no money behind it.
More of a risk-on trade you would pursue at this point versus risk-off.
I would do risk-on for sure. The byline's positive and buy pullback.
As long as it says. Okay. Yeah. All right. Good to have you back. Happy New Year. I haven't
Thank
seen
you
in
so
a while.
much. Good to see you.
Good to see you.
Vance
Thanks for
Howard,
joining us.
CEO and portfolio manager at Howard Capital Management, right here in studio.
This is the Bloomberg Business Week podcast. Available on Apple, Spotify, and anywhere else you get your podcasts. Listen live weekday afternoons from 2 to 5 p.m. Eastern on Bloomberg.com, the iHeartRadio app, TuneIn, and the Bloomberg Business app. You can also watch us live every weekday on YouTube and always on the Bloomberg Terminal.